Day, another dollar with your boy, and we're looking at our ES futures contracts per usual. We're gonna be looking at a 30-minute time frame, and then just briefly to reiterate things, just look at our daily time frame as well. Overall, today was not a whole lot. Presented, some really good trading opportunities, as it was a mostly rotational day. We remained in the lower distribution for majority of the day. I remember yesterday we went out with a quadruple distribution day down towards the downside, right? We went with quadruple distribution. And in yesterday's video, I was discussing how we would like to see this market open up. If you're a seller, open up in the lower distribution and trade below the previous day's low or yesterday's low. Well, we kind of got exactly that, except for a whole lot more chop. We pretty much remained in the lower distribution or slightly below it for majority of the day, just chopping around from highs to lows, very rotational, fading the extreme or the edges would have paid well. I did well on the day, didn't make a whole whopping load of money, but $300 is still really good, and especially whenever we're trying to build confidence and consistency. And I didn't get anything over a 5 lot of MES today, so traded really well. Most of my trades were early in the morning, just picking spots where I felt I was comfortable, taking the short on pushes up, and as it came in, taking them off was pretty much the play all day long. I missed one good trade today that I really should have held on to. Was a little bit later in the day when we went to make this new low in the day. I was actually short in the time frame prior. I was short around 51.06. As soon as we got back below that opening, I was short. I got short around 51.06, and it came in really good. I got out what I wanted on it, right? Made money nonetheless, because I didn't know if this market wanted to continue to grind up higher. I would have looked for a short opportunity, basically where today's high was, right around this 51.23 level was the next area I would have looked to taking a short. However, as it came in, I was happy to take that trade off. But it ended up resulting in new lows on the day. I think that was partly due to one of the, I don't know if it was Jerome Powell or somebody was out there. Some Fed speaker was talking today about Canada rate hikes and cuts and everything. But how does that apply to us? I don't know. But pretty much resulted in a whole lot of nothing burger, as we just kind of chopped around today. We took out both the overnight low and the overnight high and got nothing for it. When we took out the overnight low and took out what we had put as our low of the day in C period at 50.81, we got crickets below it as we shot right back up, only to take out the overnight high. Overnight high was right here at 51.20. That would have been an excellent area to get short. 51.20, yes, you would have been, for me, I would have been risking up until 51.27, right? Once we get above that area, I would have gotten out of my short for a loss. But getting short at 51.20 or at the overnight high would have been an excellent short opportunity. Why is that? Well, you have clearly developed a wide point of control down here around the 5100 level. Okay, odds favor, especially when the day's been rotational, odds favor us coming back and visiting that area. So yes, I'll risk 7 points to make 20 points back to the downside to that 5100 level. And it would have worked out well. It would have worked out excellently. I mean, look at this push up here, right? If you're looking at the 1 minute chart in the top left-hand corner, you can see right here, that push up right there resulted in a massive push back down, which you would have gotten paid, right? Obviously, for my money's worth, I probably would have gotten out around the 5100 level, around the point of control, which is my target on the downside. That's where I would have gotten out on that trade for a nice profit. Yes, you could have held until the lows down here, but I wouldn't have been expecting to see such a thing. Yes, it was a great opportunity, and look at where the 144 simple moving average was located in that trade, right? So we're looking at the 1 minute chart here. You see that spike up above the overnight high, right? Overnight high is right here at 51.20. We spike above it. We push up to that third standard deviation. Get short 51.20s, right? Maybe on this push down here, you're short 51.17. You don't catch the high, you're risking a couple points to the upside to come back in to VWAP to come back into where point of control was located, to come back into the 144 simple moving average. That is a target on the downside. You get out for a nice 17 to 20 point gain while you're only risking anywhere from 10 to 7 points on the upside, right? And yes, you could have taken profits down here at the lows. Maybe you took some off here. You're targeting the lows, and as you see this consolidation here, that's when you start to take off the other portion of your trade, right? But for me, I would have most certainly been targeting that 144 simple moving average and VWAP area, as it did come in pretty aggressively and quickly, so I would have been happy to take the profits off there. That is the one trade I wish I would have been around for, was fading that extreme up there, as the chances of us going trend up was very slim, and the likelihood of us getting back to that 5100 level was pretty good. So that was the only trade on the day that I missed. Other than that, I don't think I would have taken any other trades besides the ones that I did. So we pretty much just go out with today's high, today's low, and a wide point of control. Now count with me, right? There are 13 time frames in the day. We go out 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 time frames out of the 13, traded back and forth between 5100 and pretty much, I think that's the same here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So yeah, closest to halfback being 5101. That would mean point of control is right here at 5101. So 11 wide point of control, 11 time frames out of the 13 traded back and forth through that. So that will act as a magnet at some point in the future. Now the question is, because we took out yesterday's low and we really didn't get much extension below it, right? Is the trend beginning to slow? Yes, we had a wide point of control here. Is that a sign that maybe this trend is starting to slow to the downside again as we approach that previous month's low? Now keep in mind that previous month's low, March's low, is 50.63. Okay, it's right around this level, right before the gap gets filled. If you are somebody who is short right? You're somebody who is short, maybe you're getting out of that position, right? Which would cause some absorption, right? Because they're having to buy back, right? That would cause the absorption here. Maybe that's why we're seeing the 11 wide here. Okay. Another reason the market trend could be slowing here is maybe you're a buyer and you've been waiting for this pullback to come in, right? To get back to these moving averages, to get below the 50, get below the 20, because you think this market's going to rotate back up into the all-time highs up here at 53.22, which is 200 points away. Maybe you're getting long here, right? Thinking we're going to hold that previous month's low, hold the one-time framing up in the monthly, hold that trend up in the monthly. So you're getting long here, right? Maybe that's another reason why the absorption is coming in here. Maybe that's why we see this 11 wide point of control today. Now, this is all speculation. I'm not saying that that's exactly what's happening, but in my head, that's how I'm seeing it, is that the buyers are both the people that sold up higher, right? Those that sold up higher are now becoming the buyer, and then those that have been waiting to get into this market, big money, smart money, swing traders on the bigger time frame, maybe this is what they've been waiting on to get into the market, right? So maybe that's why the trend is starting to slow here. And if that is indeed the case, then tomorrow we should take out today's high at 51.23, and then maybe take back some of this this trend day back from Monday, right? Take back some of the trend day on Monday. Maybe consolidate between 51.27 and 51.53, but above yesterday's high, which would put us back into an initial 3-day balance, and that would stop the trend on the downside, but the weekly would continue to be in one time framing down mode. The only way that stops is if we take out the previous week's high. Now that was a mouthful. Hopefully you guys followed along for that. Now let's go ahead and mark these destinations. Like I said, I did well today. I'm very happy. We did eat into that gap a little bit more. We ate into that gap a little bit more. There's only about 20 points left, 23 points left in this gap. Now for the SPY, it is a little bit different. The gap is a little different for SPY than it is for ES. So keep that in mind if you're looking at the two differences there. Now, I cannot believe how great of a short this was up here at 52 or 51.23. This level here was definitely the short of the day, in my opinion. That will be our high of day. 23.25 is going to be our high day. Mark that, and then we'll mark our 11Y point of control here at 51.01. Oh no, hit the escape button. And if you guys have made it this far and you are enjoying the content, please leave a like down below if you do not mind. Helps your boy out. Once again, huge shout out to my mentor, Paul Asmar. Without him, I'd be absolutely nothing. So if you guys want to learn more about the market profile, go check him out, Paul Asmar, on YouTube. Go check out his channel. If you guys want to join the Discord room that we're in, go check out camelbacktrading.org, as that is his Discord room that you would be joining, and it is an excellent one with great information and great group of guys. Go check it out if you guys want to. So there you guys have it. So tomorrow, what are we going to be looking for tomorrow? Well, ideally, we'd like to open up below 5,100, essentially. We open below 5,100. You want to see us get the previous day's low, or get today's low down here at 78.75, get into the gap and fill that gap down here at 50.57, right? If we can take out today's low, then that would indicate that that the trend is still young and that we can continue to push down lower, right? If you are a seller, that is what you want to see. Continue to take out daily lows, get good extension, have maybe a trend day or just one time framing down continuously without trend is even enough for me to say that it is a strong trend to the downside still. On the other hand, if we cannot take out today's low and we do not open below 5,100, you will trade at 51.01 most likely. If we do get above 51.01, your upside targets are 51.23, 25. We take that out. You will go and fill the first set of single prints and dip your toe into that other distribution up here, which would act as initially some type of resistance, I would assume, right? You would assume that this area here would initially act as some type of resistance. So you would look for any reactionary sell from that point. Maybe you see some consolidation in between those areas that I was discussing. And at that point, the daily would go from one time framing down to back in balance. Okay. So from today's high, 51.23, your targets are 51.27, 51.53, 51.65.25, 51.67.25. And then you're back into this other distribution where if you're a seller, you definitely don't want to be back in that range of 51.80. All right. If you're a buyer, excellent work. If not, yeah. But if we do take out today's high, keep in mind what I said just a few moments ago about this, about the trend slowing and the possibility of both the seller getting out and the buyer stepping in. Now let's go ahead and look at the daily time frame just briefly. I believe this is SPY. Nope, this is ES. Okay. So just briefly, we are looking at ES here on the daily chart. Keep in mind, we've been one time framing down 1, 2, 3 days in a row. Twice now we have been closed below the 50-day moving average. Now 1 day doesn't make a market, 2 days doesn't make a market. We have to continue to see and monitor and see how we react. Also, keep in mind, 51.51 is the 50-day moving average. Real quick, let's go back to our 30-minute time frame. 51.51. Let's see where that lines up. 50-day moving average is 51.51. Where does that line up? Well, look at that. That lines right smack dab up where the single prints would fill on the upside. So another reason that 51.50 area could act as some type of resistance just initially if we do get above today's high. All right, back to the larger time frame. So you got to keep all these things. This is why we review these things. Is so we have this in our head for the next trading day. So we know what we are looking for. So we have the idea, right? Imagine you're somebody who is up here trading above 5150 and you get long, not knowing that the 50-day moving average is there, not knowing that that is an area where another distribution is located, not knowing that that's where single prints fill. There's so many traders that will get long in that area, not knowing that, and then get hurt once it rolls over. So another reason you should join Paul Asmore's trading room. He just explained those things, and now it's in my head forever. On the other hand, because we have been one time framing down, you look to continue the trend, right? You want to take out today's low and get good extension below today's low. If you do not, then once again, the trend is just showing another sign that it may be slowing. And look at this March low. Look at all these daily lows that were right here next to each other. Never got taken out. Several daily lows right here. 1, 2, 3, 4 daily lows around that 50 level, 50.63. That March low never got taken out. So if we do take that low out, it could get ugly to the downside. Because after that point, your next daily low isn't until the 4,900 level, 49.98, or excuse me, what is that low? 49.59, 49.60. So for another 100 points to the downside, you really don't have much to lean against, in my opinion. I mean, yeah, there is this premium gap here, but other than that, you don't have much to lean against, in my opinion. So if we get below last month's low, we stop the one time framing up on the monthly, that would cause some type of pause or some type of hesitation potentially in the bull market that we are experiencing at the moment. With that being said, ladies and gentlemen, thanks for stopping by. I hope you all had a wonderful day trading. Hopefully you guys found this helpful. If you did, please leave a like down below. And once again, we'll catch you guys in the next one. See you.